South Africa's economic growth is struggling due to unclear policies and business regulations that scare off investors. Despite attractive asset prices, plans like the national health insurance and land reform have raised concerns because their funding and execution are unclear. While the government focuses on infrastructure and reducing inequality, conflicting priorities have slowed progress, with GDP stuck below 1% for years and unemployment at over 30%. Experts warn that without clear strategies such as transparent healthcare partnerships and land policies, the country risks losing out on investment opportunities. To avoid long-term stagnation, South Africa must find a balance between social needs, financial stability, and investor confidence. South Africa's bid to attract foreign investment is being undermined by controversial policies, sparking warnings from financial experts. Francois Gous, the CEO of PSG Financial Services, one of South Africa's top asset managers, argues that recent legislation has created uncertainty, making investors hesitant. He stresses that South Africa urgently needs new capital to boost growth, but warns that policies introduced in the past 6 months have been distinctly anti-market. President Cyril Ramaphosa's government has promised to boost the economy with big infrastructure projects and reforms to tackle inequality. However, these plans often conflict with business-friendly policies. A major concern is the National Health Insurance Scheme, which aims to provide universal health care, but faces criticism for unclear funding and execution. Francois Gous of PSG said, "The NHI has been discussed for 20 years, yet there's still no solid financial plan," highlighting a trend of vague policies that worry investors. Economists estimate the NHI will cost around $30 billion a year, about 6% of our GDP, which could strain public finances unless the private sector is involved. Business leaders have called the plan unaffordable and unworkable. Recent changes to South Africa's land expropriation laws, allowing the state to seize land without compensation under certain conditions, have sparked controversy. President Cyril Ramaphosa signed the Expropriation Act into law in January 2025, replacing the 1995 version and introducing provisions for nil compensation under specific circumstances. Critics argue that the act may not pass constitutional scrutiny as it challenges the principle of fair compensation for expropriated property. The government claims the policy aims to address apartheid-era land dispossession, where apparently 80% of land was reserved for the white minority by 1994. However, the actual amount of land currently owned by white people versus black people remains unclear, as the government continues to rely on outdated ownership data from nearly a decade ago, conveniently supporting its narrative. Legal experts and business leaders have raised concerns about the ambiguity surrounding the compensation criteria, warning that uncertainty could deter investment. South Africa's economy continues to struggle with weak growth, high unemployment, and deteriorating infrastructure. In 2024, GDP grew by only 0.6%, continuing a decade-long trend of sluggish expansion. Unemployment remains critically high, with the latest data showing a rate of over 30% in the fourth quarter of 2024. Despite these challenges, South African assets such as stocks and real estate are undervalued, yet investors remain hesitant due to policy uncertainty. The JSE All-Share Index currently trades at a price-to-earnings ratio of around 14.19, which is below many emerging markets. Concerns over regulatory hurdles and energy instability persist. While the World Bank's latest ease of doing business rankings are not available. Past reports place South Africa behind regional peers like Rwanda and Kenya. Experts warn that without clearer policies and economic reforms, investment inflows will remain weak. The tension between transformative social policies and market pragmatism reflects a global dilemma. How to address inequality without spooking investors? Brazil and India face similar challenges, balancing welfare agendas with fiscal discipline. Yet, South Africa's unique history amplifies risks. The ANC's push for radical reforms, partly to counter rising discontent and political rivals like the EFF, has led to a legislative overreach, prioritizing ideology over feasibility. House and business leaders call for clearer policies, including transparent funding plans for the NHI and land reform that aligns with constitutional protections. Ramaphosa's 2021 promise to accelerate renewable energy projects drew $55 billion in investment pledges, showing a possible path forward. However, slow government processes and Eskom's ongoing financial troubles highlights deeper structural problems. South Africa's lack of investment is avoidable. It is caused by poor decisions by government. Social reforms are necessary, but their rushed implementation without proper consultation or financial clarity has made investors wary. The country faces a choice: stick to rigid ideological policies and risk economic decline, or embrace practical, inclusive strategies to unlock growth. Without urgent action, even the best investment opportunities may remain out of reach. Thank you for watching, and if you found any value in this video, please do like, share and subscribe, and I will see you in the next video.